In today's episode, we are going to be talking about the why of property investing. Why would you want to get into this crazy game? So if you're a new investor, there is going to be tons of gold packed in this episode just for you. So stick around. You're watching the Smash Property Insider podcast. I'm your host, Nick V. Let's get started. Let's do this. Akira, how you doing?
Very, very good.
Welcome back to episode number 3, Smash Property Insider podcast.
Enjoying the flow of these podcasts.
I'm really liking how this is going as well.
Yeah.
This is a lot of fun.
It is indeed.
All right. So today's episode, we're talking about the why of property investing, which I think is very important, especially if you're a new investor. You really want to understand the why you'd want to do all this crazy stuff.
Why anyone would want to get into it.
Why would you want to buy when interest rates are going up?
Yeah.
Why would you want to buy when property prices are as high as they've ever been?
Yeah.
It kind of doesn't make any sense.
How do you even do it as well? Yeah.
The why, the how, the nuts, the bolts. Let's get straight into it. And let's sort of talk about, I think maybe some of the benefits of property investing.
I think so.
Let's maybe start there. So why don't you want to kick us off with some of the benefits that you see from property investing?
Yeah, definitely. I think the benefit, number one, I would call out, especially from how I saw it when I first started this journey, because I was thinking about stocks and things like that. But I was like, property is a necessity. Everyone needs a roof over their head.
Exactly.
That's why this was the key for me and just the safest bet, essentially.
I think so. And it's kind of a good way to put it in that we all need somewhere to live.
Exactly.
Right. It's,
we're humans.
We're humans.
Food,
we need a nice roof over our head. And we need food and shelter. That's obviously super important. And I think one of the other fundamental components of property is that it's not going anywhere. Like, to your point, we need it, but they're not making any more land. Yeah. Yes, there's, land reclamation projects across the world, but that's on a very small scale, right? Like land is land and that's it. So I think from a fundamental perspective is there's not any more of it. Yes. We're using it up day on day, year on year. So it's only going to become more scarce as time goes on in that the land component of property. Especially
in regards to Australia with resources, the centre of Australia is pretty barren, but in regards to where you can actually get resource and versus infrastructure, land is the most valuable asset you can have, I think, personally.
Absolutely. And you were sort of just mentioned there, like particularly with Australia and Australia being an island. And when we start to think about, to your point, really only we populate the outer edges of the country, like right on the coast is where like most of the people live.
The capital cities,
and cities and
regional coast
all up and down the East Coast. But when we sort of overlay the data of, overseas migrants coming to this country. Yeah. Versus the supply of housing in this country, there's a shortfall, and there's a significant shortfall.
Especially in the recent years.
And we won't get into, the was that right, yes or no? That's a separate sort of thing.
That's a conversation for another day.
That's a conversation for another day. But what the point I'm trying to make is that the fundamental supply and demand, the economics behind that has driven up prices significantly.
Yeah. And I think there was a Wolf of Wall Street quote where it's just comes down to supply and demand when you're trying to sell and buy something.
It's the bare bones of it all. And Australia has always had a migration policy. We've always had to kind of, bring in more people, more skilled migrants, which is what we've done for, decades to sort of grow the population, which is what's continuously stimulated the housing economy. Now, is that always going to happen? I don't know.
We don't have a crystal ball.
I'm not a crystal ball. I'm not a political expert, but that's a huge reason as to what's fueled the prices with property recently.
Agree.
So kind of just back to the benefits. We talked about your
human necessity,
the human aspect of it, right? We need it. There's people moving here, so it's pretty good. I think from my perspective, one of the major benefits that I see from property investing, or the why behind why you'd want to do it, is the leverage component.
Yes.
Right? Because like you were saying, you were thinking before you bought property, hey, is the stock market the way to go? Is crypto the way to go? Is government bonds the way to go? And they're all great investments. The fundamental difference being is that you can leverage your money with property easier than you can with those other investments.
So give me a bit of detail. Okay, explain it further. What do you mean by that?
So just as an example, right? Let's use some round numbers and say you had $100,000 cash that you've saved up for years and years and years in your account.
Yes.
You got 100 grand, all right? Let's say you want to take that 100 grand and you're like, I want to invest it somewhere.
Okay.
So you could take that 100 grand and you can put it into an ETF in the share market, right? You're probably going to get some really great returns there, 8-9+% year on year. It's amazing, right?
Who could complain?
But with property, you can take that 100 grand and you can go to the bank and say, hey, I'd like to buy a house for $400,000. Okay. The bank is then going to give you the other 300,000 so that you can go out and buy that property for $400,000. But the difference being is you're still using that same $100,000 cash that you'd saved.
However,
but you are earning the growth, the appreciation on the $400,000. And that is where the wealth is built. But that's not it with leverage, right? So we've just turned our 100 into 400.
Okay. Point number one.
Point number one.
Point number two.
Point number two is that $400,000 property, if you've bought in the right market, let's say you did your research right, it is then going to increase in value over time, right? Yes. What you then do with that money once, let's say you bought it 400, it's now worth 500.
Yep. Extra 100K.
Extra 100K. You go back to the bank and you say, hey, I want to go out and buy another property.
What do you do there?
Now, so long as you can service the debt, that's a big component, and that's probably another episode we can get into how to make, how to get the servicing right.
And structure.
You can then take that 100 grand and go out and buy a second property and do the same thing over again.
A babushka doll, basically, we called it.
A babushka doll. The properties make babies. Property 1 buys property 2, property 2 buys property 3, and so on and so on. And this is how the wealth is built. And that is, for me, one of the biggest reasons as to why you would want to invest in property.
That's gold. That's genuinely very, very well put together and well said.
We did say there was going to be some gold dropped in this episode, and I think that was
I've tried to explain that exact concept, but I think you articulate it really, really well.
Alrighty. And so we've spoke about the benefits. We've spoke about the human necessity, right? We've spoken about the leverage component. So the way that the financial system is structured, we can go out and leverage our money to go and make more money with it. So let's kind of segue, like you were saying, into inflation. Buying property or having a property portfolio, whether it's 1, 2, or whatever the number is, I think is a great hedge against inflation. Because like we were just saying, you go out and using that example earlier, right? You got $400,000 house, $100,000 of that is yours, $300,000 of that is debt.
Correct.
Okay. As time goes on, as inflation continuously happens, inflation pushes up the value, perceived value of the property, so that it's no longer worth $400,000 in 30 years. It's doubled, it's tripled, it's whatever it's done, but you haven't done a thing. You've just sat there. You've just held that. And let's say
$300,000 in 30 years.
Let's say you didn't leverage that property any further and you didn't pay down any debt, and the property doubled in value. You've got $300,000 worth of debt and a property now worth $800,000.
Yep.
Right?
That's a no-brainer.
You pay off today's debt with tomorrow's inflated dollars.
Yep.
That is, I think, the secret power of property, the secret power of inflation, and the secret
power of wealth generation
of the monetary system that we've got.
Yep.
The Ponzi scheme, as some people like to say.
Yeah, basically.
So let's sort of recap what we have with the benefits. Leverage, human necessity, appreciation or growth that you get out of it, and a great hedge against inflation. I think those are some amazing benefits of property. And I think each one of those things that we spoke about, we could probably deep dive into its very own episode later.
Totally. I think maybe last point, should we add one more?
Go for it.
I think it's a nest egg, for me especially. It's something that you can do today. Costs you a little bit of money maybe, but it's something that you can do today and tomorrow know that it's going to grow in value and you have something to give you choices. That is the biggest thing for me, to have options and choices down the line. Yeah.
And I think I completely agree. I would just kind of want to round out that with no one knows what's happening tomorrow.
Okay,
there is no guarantees, right? But with property, there is hundreds of years of data you can look at
and history
to give you an indication of what tomorrow may look like.
Okay,
all
cool.
right, which I think is a great thing to kind of segue into the next sort of why of property investing. And I think for a lot of people, like we said in a previous episode, there's lots of different lanes you can be in with property investing, right? But I think the main sort of two is you buy it, you hold it.
Yep.
Number one. Number two, you buy it, you renovate it, you flip it. Those are probably like the very most common strategies or approaches, however you want to put it, is like the main two. So let's kind of talk a little bit about what's the benefit of buy and hold, and what's the benefit of reno and flipping, and maybe some of the things that people should look at when they go and potentially want to do those two types of things.
Yeah. So very simply put, I think the biggest difference is understanding the why. Like we said before, why do either or? To me, the buy and hold is a very low risk in comparison to the flip. It's dependent on your risk appetite, dependent on the type of person you are. Do you want something that you can just set and forget for the most part, whether it be maintenance or whatever it may be? Or is it something that you're looking to go into and attack and basically create as much capital growth by manufacturing some value? It's just, what is the intention behind getting into that specific property?
Exactly right. And I think you framed it well in that what is your intention? What is the outcome that you're looking for?
Yeah.
And I think, for example, let's kind of stick with buy and hold for a second.
Yeah.
It's, to your point, it's a lower risk.
Yes.
It's a longer term. And I think overall, it's a low risk, long term way to build your wealth.
Low risk,
because
long term.
You keep sort of collecting these properties, right? And using the examples that we had before, over time, those properties, if you're buying in the right markets, are going to appreciate in value. And that is where the ultimate wealth is built.
Yes.
But it takes time.
Yeah.
Right?
I agree.
With a reno and flip, for example, a bit of a higher risk, particularly if you've never done it before and you don't quite know.
That's the intricacies of building as well. And, with older properties, there can be like unforeseen kind of issues and things like that. Asbestos, who knows what it is, but often unforeseen kind of aspects to older builds.
But the benefit being that you can manufacture value much quicker. Yeah,
right? It gives you a bigger pool of cash. Obviously, you have your overheads with the buying and selling costs, but you factor that in, you do your numbers, and then you make sure that you're making a profit at the end of the whole exercise and experience.
And I think the reason I would say that it's a higher risk is that you have to kind of know what you're doing.
That's it.
Like you have to know where the value is in a property and where the value isn't. All right. I think number one. Number two, you would need to understand the market that you're doing that in, right? And I think a very simple way to put it is you want to buy the worst house on the best street. That way, then you kind of know, hey, there's a bit of opportunity here to increase some value and then extract that either when you sell it or you can hold it, refinance, pull out the equity and go and do it again, which is what some people do.
Yeah, correct. So the why between the two is just understanding what your intention is, I guess, essentially.
Intention is everything. No, 100%. Intention is everything. I think it's worth also mentioning that they aren't the only two ways in property, and we've said it on other episodes, right? But I think they're the most sort of common, routes that people tend to want to go down.
Kind of options,
maybe in another episode we'll cover a bit more detail
around strategy,
about some strategies and stuff like that, because it's super important, the strategy component.
Agree with you.
So we've got a buy and hold, we've got a reno and flip. We understand there's a low risk version, there's a high risk version. We kind of get the benefits of both. Let's talk a little bit about common misconceptions with property investing. I love
this one. Yes.
Which is a super interesting one. And I think this is kind of framed from, I think first and foremost, our just experience in the property game for years and years and years now.
Speaking with clients as well.
Speaking with clients, speaking with other professionals in the industry that we've just spoke to and seen and met on our journey over the years. And I think, why don't you kick us off with one of the biggest misconceptions with property investing?
Look, this one came up a couple of days ago. Speaking to someone essentially under the assumption or belief that having positive cash flow properties to maybe $50 to $100 is going to give them the ability to buy another property.
This is a huge one, and we've had this a few times. And I can understand why that, and I think the misconception being is that cash flow builds wealth, when that's not necessarily the case. Capital growth ultimately builds wealth. Cash flow allows you to either accelerate that journey or slows you down, depending on how that looks.
Correct.
But
that shouldn't be the number one factor that you're investing.
No, and I think the example that you're talking about is we had an investor that had a couple of properties in their portfolio, and they were quite negatively geared. I think he had some off the plan properties, and it wasn't really set up too well, right? So the fourth property he wanted to buy, so he could continue buying because he was stuck with servicing, was he wanted a positive cash flow property that put $100 a week in his pocket after all expenses.
Yep.
Now, $100 a week is what? $5,000 a year.
Not much.
Right? That would have added, I don't know, just rough maths, 25 to maybe 40 grand in
at
servicing, which that's not really going to get anyone anywhere.
Yeah.
All right. So I think the point being that, cash flow alone is not going to build wealth. Cash flow alone is not going to see you through to financial freedom. It is about having a balance of both. Yeah. You need the growth to build the wealth. You need the cash flow to pay for all the debt and the expenses.
Correct. I think it's about being well-rounded with your portfolio and looking at it basically holistically. Understanding that your job is to know what the banks want and finding properties at each step on the journey to be able to find the properties to make them happy, essentially.
Exactly right. Your broker is going to be your best friend when you're building your portfolio. So, common misconception. Number two is that you need to see the property to buy it.
Yes. I've seen one.
Now, in my journey buying pretty much every property interstate, I have never seen the property in the flesh before I have signed and bought the property.
Are you a builder?
I'm not a builder. I'm not an expert.
Okay.
I am just the guy who's bought property. Now, people will probably watch this and go, you are absolutely crazy. Why would you want to spend hundreds of thousands of dollars and never see the thing? The reason being is a couple of things. I look at the numbers when I'm buying my investments. The numbers do the talking, right? If the numbers don't work, I don't buy. If the numbers work, I buy. It's as simple as that. I'm a simple man. Now, a lot of people would want to say that, don't you want to see kind of how the property looks and feels? And it's important. I get it.
Because you want your tenants to be in a quality property. You want to know it's going to grow in value.
You do. Yeah. Absolutely.
So I can see the rationale.
I think if you're limiting yourself to wanting to see the property, unless you're willing to travel interstate frequently to see the property and inspect the markets before you buy it. If you can do that, great, go ahead and do it. But I guarantee you most people don't have the time or the resources to be able to do that.
Correct.
Okay. And there's a lot of things that you can do with the right team around you.
Agree.
For example, having a great building inspector. All right. The building inspector is the expert in building. He's actually going to tell you if the property is going to fall down or not. Right. Way better than I could. I couldn't even tell.
It's not even that. Happen. It doesn't even have to be to that extreme. He can go into the smaller details of knowing, in a couple of months, you're going to have to maybe look at the gutters or maybe look at sealing this tile or whatever it might be.
Exactly.
He will be able to give you that detail. And that's what the whole report is about. Going 100%. Into the nuts and bolts, in regards to the detail of that property. And you won't be able to see that if you're not a builder and qualified builder.
Absolutely. And then I think another, component to that would be, I want to see the area. I want to see, what the neighbors look like. And that's all valid. And I think leveraging the power of technology, you can do that, right? You can get a video inspection, obviously, of the property.
Yeah,
but
Google
you can
map
get
it.
Google Maps. You can get a video inspection. Hey, ask the agent, hey, just show me the neighbors. Have a look around the area. The Google Maps, you can really see how close is it to a bus stop? How close is it to the city?
Correct.
What's the nearest shops look like? There's so much you can get from Google Maps.
Technology is your friend.
It's amazing. So I think a common misconception is that you need to see it before you buy it. I don't think that's true, particularly with technology and where we are right now.
I agree. I think further to that, what I would say is what it allows you to do is make a rational decision, because it allows your emotions to stay out of it. Once you see a property, imagine if you really, really love it, your heart would be broken if you didn't get the deal, those types of things. So It's one of those things to really enable you to treat it like a business, because at the end of the day, if you start getting emotionally involved, having costs involved with traveling to each property, if it is interstate, you have further likelihood to have an emotional attachment to a specific property.
What do you think common misconception number 3 is?
Number 3, I would say you need a lot of money to start. Yeah. So look, I think it's dependent on your strategy, of course, but I think with property, there's a lot of markets available, a lot of suburbs available, a lot of price points available. Whether you are in those areas or not is the difference. And this is where doing research, understanding data, speaking to people is going to be your friend. Because if you're just in your bubble and you're looking around your area for a property, that potentially is going to be quite difficult.
And that's a great point, right? Like if you live in Sydney, you're looking around going, shit, how am I going to afford these, a house for
$1 million
over
plus.
$1 million?
Yeah.
When there's other markets in the country right now where you can get in for, half that, or less than half that.
Less than half that. Yeah, correct.
So I think that is a common misconception, is that you need, tons of cash. And look, don't get me wrong. You need cash to buy a property.
Yes.
And it is a lot of cash. Even, you're putting a 10% deposit down on a $300,000 property. That's still a lot of cash.
Correct.
But you don't need hundreds and hundreds of thousands of dollars to do it.
And I think the other thing is it's for the first property. If you buy the first property correctly, like we were talking about before, you got those babushka dolls, they keep buying you more properties. It's just the main thing of getting that first deposit down and finding an asset that is actually going to grow.
Absolutely. So I think there's quite a bit that we've sort of covered here. So let's do a little bit of a recap. So we spoke about the benefits of property investing, and there are some insane benefits. When we talk about leverage, we talk about human necessity, we talk about appreciation, the hedges against inflation. There's a lot of yeses to invest in property. There's a lot of pros. We all know what the cons are.
And maybe we can go into that on another episode.
In another episode, maybe we can cover the downsides of property investing. So there's a lot of benefits. We spoke also about the buy and hold versus reno and flip. Why you would maybe want to do one strategy or the other. There's no right or wrong. There are obviously other strategies as well.
Agree.
And the common misconceptions that we've just covered. So those are some of the reasons as to why... The why of property investing. Which is really important.
Yeah, that's an important question to ask yourself before you get into it. Because I think if you don't, you're going to be flying in the dark.
No one wants to fly in the dark.
No.
And I think on that note, we might wrap up this episode. Episode number 3 of the Smash Property Insider. And thank you to everyone for joining us for episode number 3 of the Smash Property Insider podcast. We are going to be back every single week with a brand new topic on property investing. So if you want us to cover a particular topic, reach out, let us know what you'd like us to cover in future episodes, and we may just do that. But for now, thanks for watching. I'm Nick V. This is Akira. We'll catch you soon.